Hi everyone, I'm Nancy Godrad. In this video, we're going to go over how to prepare a cost of goods manufactured schedule. This is a schedule that we prepare for internal use. It's not given to outside users. And it can be prepared for every month or every quarter or once a year. Definitely once a year. You need it. Now, what are we trying to show? We're trying to show how much money we spend producing the product. And if you remember, there are the product cost has three elements: direct material in here, direct labor, and manufacturing overhead. Now, because this is a report that's going to go to management, it needs a heading. The heading will show the name of the company, the name of the statement, cost of goods manufactured schedule, and the period of time that it covers. So in this case, I'm going to use an example for the year ended December 31st, 2012. Now, direct material, in order to arrive at direct material, we're going to start with how much material we had at the beginning of the year, add to it any material purchased, and the addition of these two is how much material are available for sale, and reduce it by material that is left at the end of the year. And the result is going to be direct material used. I'm going to use an example so you can see how to fill out this form. So we have a company named Harvan Manufacturing Company, and this company, they have given us the data for 2012. So let's put these next to each other. The first item, raw materials inventory at the beginning of the year. So I'm going to put the raw material inventory at the beginning of the year, 94,000. They gave us raw materials inventory at the end of the year, so that's going to be in here. You need to reduce that a little smaller, so you need to see the end of the year being 12/31/12. Then we're going to go look at all the numbers to eventually find how much materials was purchased, because we're filling the components of this puzzle. If you look through the numbers, you will see in here raw material purchases is $135,000. So let's put this $135,000 in our schedule. So 135,000, and then we're going to add these two numbers and reduce it by the ending raw materials, and the result would be how much material was used during the year. In this case, 140,600. Now for direct labor, anytime you see either they're going to give you direct labor, such as in here, they gave you direct labor, or they say assembly, the wages for assembly personnel or employees. So in this case, our direct labor is 290,200. Then we need manufacturing overhead. Remember that manufacturing overhead is any cost related to factory that does not include direct material or direct labor. So examples are indirect labor, indirect materials. So this company has indirect labor of 36,200. So I'm going to write down 36,200. Why am I creating different columns? Because the column to the right always shows you the totals, and the column to the left always shows you the numbers that went into calculating that subtotal or total. So in this case, really my direct material used and direct labor should have been in the column to the right. And I can then put my overhead in here. So indirect labor, if you look at the data, there is no indirect material. So we can get rid of this row. Not every company will have all the items that I have listed here. So for, I listed these numbers just to give you an example. Factory rent, let's see if there is a factory rent in here. I do not see factory rent, so therefore we can also eliminate this row. I wrote them in here to give you an examples of what type of expenses will show up under factory overhead. Now, factory utilities, they did give us this number. Factory utilities are $25,800. Factory machinery depreciation related to factory machinery or equipment, $15,400. I went out of order, but you can put it in order, it doesn't matter. Factory repairs is $1,600. Plant manager salary, they gave us plant manager salary down in here, $60,000. Factory insurance, let's see, is $14,800. Factory property tax is $12,200. Let's see what else is factory related. Guys, you will see office utilities expense, sales discount, finished goods. These will not go into cost of goods manufactured schedule. These are information needed for a different portion of the question. So what else? Cash is an asset. It's not going to go there. We already used direct labor. We used the indirect labor. Accounts receivable is an asset. It will not go into the cost of goods manufactured schedule. So let's add up all our manufacturing overhead and put it into the column on the right. So we're going to look at the sum of all these numbers. So our total manufacturing overhead is $166,000. So we're going to call it total manufacturing overhead. Now, if you add the direct material used to direct labor to manufacturing overhead numbers, so these numbers that I'm going to show up in green, let's add them together. What you arrive at, it's called cost of goods manufacturing cost. It's called manufacturing cost for the current period. So let's write it down in here. I want the sum of these three numbers. $596,800 manufacturing cost for current period. Now, we also, a lot of time, the companies start the year with some work in process that they didn't finish last year, and they're going to use the money that they spend on material, labor, and overhead to finish this beginning work in process. Beginning work in process is what we started last year, but we weren't able to finish it. So let's see how much is our beginning work in process in the information they gave us. If you look at the information, you will see work in process inventory at January 1st is 19,000. So let's put the 19,000 in here. And I'm going to create a separate column again because I want to put the complete totals, the end numbers in the right column. Let's now add it to the manufacturing cost for current period. How much money we spend this year versus how much money we had last year, when you add them together, so let's put the numbers in a different color so you know what I'm talking about. The numbers in yellow, let's add them together, which would be this number and beginning working process. The result is called cost of work in process, because the amount we spent this year, we might have not been able to finish all the units of our product. So if there are any work in process at the end of the year, we're going to reduce the total cost of work in process by what we weren't able to finish, in this case work in process on December 31st, 12, which is in this case 16,000. So we're going to put it as a negative number, 16,000. We're saying we spent 615,800, but we weren't able to finish out of that $16,000 worth of material, labor, and overhead. Those are the items that we have not been able to finish at the end of the year. So the difference between the cost of work in process minus ending work in process is cost of goods manufactured. So in this case, cost of goods manufactured is 599,800, and we're going to put a dollar amount next to it so we know, and then double underline it to say that this is the ending balance. So this is how you prepare a cost of goods manufactured schedule. Now, where does this cost of goods manufactured schedule end up? The number goes into calculating cost of goods sold. So we'll go over that in a different tape. If you have any questions, please send an email to me.